In this video, we're going to have a look at Maersk, the Danish shipping giant. I think it's the biggest shipping company in the world when we're looking at aquatic terms, because I think they have about 700 cargo ships on their name. Now, Maersk is a Danish company, and I'm probably butchering the name, and I apologize for everyone who is Danish and know how it's actually pronounced. I'm just trying my best at it. But Maersk is also very much located on the American Stock Exchange, and on the 10K of Maersk, they express all their revenues and their EBITDA and all their earnings in United States dollars. So this is also the currency that I will be using for my financial sheet here, and I will also be using the American stock price as well, even though they also have a stock price in their Danish currency. I will be looking at the American one. So of course, all the shipping companies, all the cargo companies, they had an absolute booming year in 2021. But let's see if Maersk was also performing pretty well prior to that. Let's see if Maersk has a proper enough story that we might be interested in buying this stock and holding it out for a decade. So looking at the revenue already, what we can see is in 2012 they had a revenue of $49 billion, which has reduced all the way to $31 billion in 2017. So I think for the initial 5 years of our 10-year history here, we can see that Maersk has been decreasing in revenue, which is not something that we like to see. But afterwards, they were able to turn it around. From 2017 onwards, they have been steadily increasing their revenue once again, and of course 2021 an absolute record year for them. So because of that outlier of 2021, they do have an annual growth rate of 2.5, but I think that's a bit tainted by the final number here. But I do like to see that they're able to regain their revenue growth here from 2017 onwards. Looking at EBITDA, it tells a very similar story, which is to say they started off pretty big with $12 billion a year. It reduced all the way to $3.5 billion here in 2017, and then it increased back up again all the way to $24 billion in 2021. This was an amazing year for Maersk, and I think the shareholders very much profited from the amazing revenue and earnings that they have been making. Now, of course, I do want to know that we're looking here at EBITDA, so not at direct earnings. This is earnings before interest, depreciation, taxes, and amortization. And like I mentioned, Maersk does have a fleet of about 700 cargo ships. So of course, the valuation of the ships is also depreciating over time. So there is quite some depreciation and amortization costs that are influencing the earnings results of Maersk. But that's why we're looking at EBITDA, because I'm just wondering whether or not they make a increase in their earnings prior to looking at these accounting changes. And I think what we can see here is very much a resounding yes, they are absolutely able to make a profit. Again, mostly because of the final number here, but like in the past 4 years prior to that as well, they've been steadily increasing their earnings once again, which is a very nice thing to see. Looking at debt level, I don't think there's that much to say really. They've been steadily holding between the $17 to $15 billion range. Now they have some outliers here in 2014, 2015. Of course, what you have to realize is that a business like this, whenever they make an investment, they make a big one, right? Because they have the ships that they buy are simply very, very expensive. So whenever they decide to expand their fleet, you will see a big increase in their debt levels, which is also what we see. We also see that they always had quite some cash on hand initially, and also like in the past year as well, because they had such record earnings. They have some additional cash on hand here as well. Overall, always enough cash to really account for any possible headwind that might be coming their way. So now we're looking at market cap, and I think this is very much the interesting thing for most investors, because what we see at the bottom here is a number that must be enticing for all of us once we see this. On average, their stock price has been increasing by 16.1% annually for the past 10 years. Now those are some amazing returns, and like I mentioned, I'm just looking at the price on the stock market. This does not include all the dividends that Maersk pays as well, because they also pay a pretty hefty dividend. They pay a portion of their profits out in dividend, which in 2021 was €2 a share. But we'll get to that in a little bit. Sorry, $2 a share. But we'll get to that in a little bit. So the market cap has grown from 18 billion all the way to 69. Nice. And that brings us then to enterprise value. Enterprise value is the entire value of the business. It's the market cap to which we then add the debt and subtract the cash. It's as if a competitor would like to buy Maersk. Of course, they have to buy the shares from the open market, but they also have to incur the debt that Maersk has. Now, Maersk doesn't have a bigger competitor because I think they are the biggest one when it comes to aquatic cargo movement, but nevertheless, just in case, to really get our definitions straight. So that brings us to the EV/EBITDA ratio. How many years does it take for Maersk to pay themselves back? And I think cargo companies, shipping companies like this, what you very much see is that it's a very circular business. We see that with Maersk, we saw that with some of their competitors as well, like ZIM, the Israeli cargo company, which has grown to astounding levels in 2021, paying out insane dividends, and now is returning back to their original level once again. So this is also why I think you see these numbers fluctuate quite a bit, because it's a relatively circular enterprise. Now you do see 2.1 times here, which is a very low number, and we also see it 3 times here in 2021 because their earnings were so incredibly high. Now clearly the market doesn't believe for Maersk to retain those earnings, because any company which is enterprise value can be bought back by 3 years of earnings is an amazing deal. But clearly the market quite doesn't believe that. The market believes that the earnings are coming down, and so do I. But nevertheless, it's interesting to see these numbers change here over time. So this brings us to the net debt to EBITDA, and I think the ratio change that you see here is really only influenced by their change in earnings, because like I mentioned, their debt level has been relatively the same, and so their net debt divided by their earnings is all influenced by the denominator. So we see here 4.9 in 2017, which like I mentioned was definitely their worst year so far, where they had a multiple of 5 times, which is towards the scary range and not something that I'd like to invest in. But of course it has been coming down, especially with the record earnings here in 2021. And now they also have some additional cash on hand to actually cushion that blow if push comes to shove. So that brings us to the cash flow statement. And I think cash flow from operations tells a very similar story to the earnings and the revenue that we have seen. We see a very big increase here of 12% annually, mostly because again this final number is absolutely ridiculous. I think COVID made it very difficult for most people to properly project a company into the future, because I have no idea what to do with this number. I really don't. But prior to this, what we can see is that that cash flow from operations has been holding between the $3 to $9 billion range. Now this brings us to capital expenditure, and capital expenditure is everything that Maersk needs to do to really future-proof their business. It's any additional investment that they want to make in I don't know, research and development to see if they can increase their buoyancy levels. I don't know, any investment that they make into additional cargo ships, in maintaining their cargo ships, in giving them a new brush of paint or a new steering wheel or whatever a cargo ship of that size requires. So this brings us to the debt payments. Now I usually don't really include this, but I do quickly want to add it into this particular number because I do have quite some leases in their portfolio as well, of course, because they operate so many cargo freights. They do have quite some running leases as well, so I want to include that into the debt payment, and also include this into the free cash flow here. Because of course, like if you are paying down debt, you can't use that money for free cash flow. Now usually I would say that free cash flow is fine to be used by debt, and I still stand by that, but I just quickly wanted to add this column in so you can have a nice look at exactly what they've been doing with their debt. So this brings us to the free cash flow, and these are showing some insane numbers, because like I mentioned, the cash flow from operation has been steadily holding, if not increasing, and their capital expenditure has been steadily coming down. So this means of course that the margins are increasing, and this means that the free cash flow is going to grow a lot more than their cash flow from operations is. So we see here about 1 billion in 2012 and risen all the way to about 16 billion in 2021. Insane record year for them here, and I think their shareholders, like I mentioned, will be very happy with that. So this brings us to the shares outstanding. Now in 2012 to 2013, I couldn't actually find any data on this, The only data I could find was that they had 2,391 shares outstanding. Now it's a bit fishy because I couldn't actually find that in that 10K. So maybe take this number with a grain of salt. But anyway, all the years after that, what we do see is that they have been steadily reducing their share count year over year. They have been buying back shares in addition to handing out a pretty hefty dividend. So this brings us to the free cash flow per share, because not only is their free cash flow growing quite a bit, their share count is decreasing a relative number. So this means, of course, that when it comes to shareholder value, you are getting a double whammy. You're getting the best of both worlds. And what we can see here is that they had a record free cash flow per share of $4.38 here in 2021. Now, they used about $2 of that to pay out in dividend. They used some money to buy back additional shares, and the rest of the money is still very much available in their, if we go to the top here, on their balance sheet in the form of excess cash. So on average, it's been growing by 31%, which are in crazy numbers because of this final number. So again, I do like to say, take it with a grain of salt. So this brings us to the share price on the open market itself. Again, like I mentioned, I'm not taking the Danish one, I'm taking the dollar one, because all of their other earnings are reported in dollars. And if I suddenly jam a different currency in there, it's going to mess up the entire sheet. So I'm going to take the USD variant of their shares. And what we can see here is that on average they have been growing by about 10% a year, which is a pretty good return for any investor, I do have to say. And they have been starting at $7 and has risen all the way to 18. Now this number has been coming down naturally because their earnings will no longer hit the record levels of 2021 during the COVID pandemic, during the supply chain issues where everyone wanted to have their stuff moved as quickly as possible, and the prices for cargo movement were, well, to the moon, basically, to use a crypto term there. So this brings us to their free cash flow yield. You can see again, just like with their EV/EBITDA ratio, as well as with their net debt to EBITDA ratio, is that it's basically been all over the place. And in 2021, with the free cash flow yield we have here, it only takes about 4 years to buy back the entire price on the open market. But of course, they've also had some negative years. So it's very difficult, I think, to really project a company like this into the future. So of course, that is the segment that we've reached to now when it comes to projection. And I do very much like to say and put a very big disclaimer here that I think it's very difficult to project a company like this because it is so circular. Now, if I was able to properly predict this, of course, I wouldn't be here. I would be sipping mojito somewhere in the Bahamas. But instead of that, I'm making videos here. So I think that should speak volumes when it comes to my predictive ability. And I also sometimes have a wrong answer. And I think especially with a company like Maersk, I think it's very difficult to get to the right answer. But that being said, I am going to give it a try. Because what we've seen here for their earnings for the past few years is that they've been steadily increasing their earnings here. Now, I think 2021 was very much the odd one out. And in 2022, where prices have normalized a bit more, they're reporting about $11 billion in EBITDA. So I'm going to give them that number as well. And I think because for the past 5-6 years they have been growing very rapidly, I'm going to give them a 5% growth here as well, because they've been able to easily hit those numbers. What we see here is 40%, 14%, 44%. Now, of course, 192, we take this one with a grain of salt. But I think the overall trend is that they've definitely been increasing their earnings. So I'm going to continue to give them that. But I'm going to give them at 5% because I do know it's a very circular business and I want to have that additional cushion there. So I'm going to increase it by 5% for the first 5 years and then by 4% for the years after that. I'm also going to give it their historic average because I think I've been relatively conservative with their EBITDA growth, and the historic average I think is probably the best number I can give it because, honest to God, it's been ranging between 2 to 13 times and it's very difficult to get any proper number there. So I think 6 is actually quite nice, conservative number for a company like this. So this gives us an enterprise value 10 years from now of $97 billion. Subtract the debt, add the cash, gives us a market cap of 83, divided by the amount of shares outstanding. Now, I'm assuming here that their share count is going to remain the same. I'm going to assume here that there's nothing changing with their share count. Of course, I know that more likely than not, they will buy back shares and this number will decrease. But if that happens, of course, it's going to be good for us. It's only going to increase our potential returns. I want to be conservative, and if my conservative estimate beats the stock market, that's when I'm going to be interested. So I'm going to keep this share count the same. And this gives me a stock price 10 years from now of $24.52. So I'm going to do the same here for their free cash flow model. I'm going to grow them by 5% for the first 5 years, and I'm going to grow them by 4% for the years after that. And as you might have noticed, I took the 2020 free cash flow per share because I do think this number here in 2021 is a bit inflated, and I think this is probably a nice conservative estimate to begin our forecast with. So I'm going to give them $1.40, and 10 years later down the line, this will have increased to $2.09. Now, you might have noticed this is still nowhere near the COVID high price that they have been doing, and they may very well beat these numbers that I'm displaying here. But if they do, it's going to be good for us. It's a nice conservative estimate nevertheless. I'm going to add a free cash flow yield of 10%. I think 7% is a bit too low of a number for me to be conservative, so I'm going to up that a little bit. I'm going to say 10%, and with a 10% free cash flow yield, I expect a stock price 10 years from now of $20.85. Now, right now on the market, we might notice that the share price of Maersk has been decreasing quite a lot from their COVID high. So during the COVID pandemic here, it was $18.13. And right now on the open market, I can buy as many shares as I want for $10.98. Now, if I take my two projections of $24 and $20 and I cut them down the middle, I expect the share price to be $22.68 10 years from now. Now, if I'm simply looking at the price on the market itself, I expect this to give me a compounding annual growth rate of 7.5%. But of course, like we've seen with Maersk, that sometimes their free cash flow is absolutely ridiculous, and that free cash flow would then be handed to you as the shareholder, because that's your pro rata ownership of the company, and you will be rewarded with that free cash flow either in the way of dividends, in the way of share buybacks, or in the way of future investments or debt payback. And we have seen Maersk do all four of those things. So if we include that free cash flow as well, and the free cash flow is the way that we project it here in our model, then I expect an IRR of 23.2% for the upcoming decade. Now, this is an absolutely insane return, and this is assuming that there is no negative years, okay? I do want to add that little caveat in there, because it may very well be possible that they have some negative earnings for a few years. Now, of course, if that happens, what we already see is that the IRR is already going to shrink quite a bit, simply from 2 years of neutral earnings, not even negative, neutral earnings. So of course, I think a big part of their stock price is dependent on their free cash flow levels, but I am not able to properly forecast that number, so I'm just going to give them a conservative, constant free cash flow growth here. I always say on average the stock market returns about 10%, and I think when I take that average, I think Maersk will very much outperform the stock market here for the 10 years. But of course, because of its circularity, it's a relatively risky business to invest in, I do think so. Although I also think it's going to be a very fundamental company to invest in, because cargo transportation will always be a thing. As long as trade is a thing in the world, cargo transportation will be a very big thing, and I think transporting cargo by means of a boat is the most efficient way of doing it, and therefore I think Maersk will have a very good, nice foothold into the future when it comes to their business model. So let's have a look. Let's see what happens if the stock price comes down a little bit or goes up a little bit. What do I expect our returns to be? Now, currently I can buy as many shares as I want for about $11, which gives me a 23% IRR, which is already an insane number. But let's see what happens if the stock price comes down about 30% even to $8. I expect an IRR of 32%. Now, this is an insane number, and I will definitely be jumping aboard of this ship. See what I did there? Jumping aboard of this ship if the stock price reaches $8. So that was it for Maersk. Thank you very much for watching. Don't forget to like, subscribe, and all that good stuff, and I'll see you in the next one. Cheerio!